Another week of trading is over at the New York Stock Exchange. The Dow Jones was in the red most of the day, ending down 137 points. The S&P 500 ended down just under 1%. The Nasdaq was down more than 1.8%. John Swartz, senior reporter at Market Watch, joins us now with more. Hi there, John. So what was driving the market down today?
Well, a lot of things. I mean, Snap's earnings yesterday, what were their earnings yesterday, really was a downer for the digital advertising market. Essentially, Snap did not offer guidance. And given the news from Twitter today, there's more news that's a precursor to what we could expect from Meta and Google next week when they report. So basically, Snap and Twitter are pretty good indicators of where the digital advertising market is going. And right now, because of the potential recession and because of the economic headwinds, there's a very good likelihood that companies are going to be cutting back on their marketing and advertising spending, which means that there's going to be fewer ads bought, which means that Google and Meta will be competing more with TikTok and others. So in a sense, it's just this kind of downward spiral in that area.
Yeah, you mentioned Twitter. So Twitter announced its second quarter earnings today, and they were lower than expected, showing revenue slid 1% from this time last year. How much of this is a result of that fractured deal with Elon Musk?
Well, Twitter actually did blame a sense of $33 million in costs related to that merger situation. So for the quarter, not only was their revenue down year over year, which is really a bad sign, but they reported a sizable loss of $270 million, of which that $33 million I mentioned is tied into the merger costs before they even go to court in October, which will escalate that cost.
Well, despite the report and the back and forth with Elon Musk, Twitter's stock continued to rebound today. Are you surprised by that?
I really am, actually. I think of Twitter as a kind of a small fish in this shrinking pond for digital advertising. In a sense, the company is in purgatory. So the future of the company and the products in question, there's an acquirer who no longer wants it. The board wants to get rid of the company. Employees are demoralized. There are layoffs, defections. One analyst said it was like Twitter's on a rowboat in the middle of a storm. So I am surprised by the result today. But then again, the market's been somewhat irrational around these events. But I mean, long term, the outlook for Twitter is not very good.
Yeah, does this feel, John, like a bit of an inflection point, not just for Twitter, but really for a lot of these tech companies where for so long, we had seen them going up and up and up?
Yeah, that's an excellent point, Elaine. I think what's happening right now, you're starting to see signs of it. So Twitter had layoffs, as you remember. Snap all but announced layoffs yesterday. Apple is probably going to be cutting back next year. Google, Meta, Amazon, Microsoft all indicated they're going to have hiring freezes or they're going to be cutting back in certain areas. There's also this fear that they might start bringing their employees back into the office to make use of their commercial real estate. In a sense, the salad days are over. And as one VC put it, this Disney-esque tech world is going to be turned upside down the next year or so.
It sounds like a new reality in the tech world. John Swartz. John, thank you very much.
Thanks.